Hello. Great. Good morning. Welcome to this very important conversation on Africa, emerging techs, and emerging economies, African experience. My name is Robert Dzato. I am the CEO of Chartered Institute of Bankers Ghana. Our mandate is really to promote the study of banking, but also regulate the practice of the banking profession in Ghana. And so today's conversation, I think, is crucially important in terms of what's happening in Africa. We have two parts to this. I'll lead a short presentation, and then we'll have a panel discussion. Is that okay? Excellent. Let me just seize the opportunity and say a big thank you to the Fintech Foundation for inviting us. Zainab, I see Zainab at the back, and Chris for making this possible. And by the way, we have a number of senior executives in banking, both at the central bank and commercial banks in this room on the program called Chartered Banker for Executive Leadership Program. So this is the opportunity to network, right? So the topic I think is very interesting, which is emerging techs and emerging economies and the African experience. I'm sure that's why you are here. Are you in the right room? Okay, great. So what time is it in Africa? All right. Well, it's time for disruption. No, and that disruption is coming from things that maybe we are used to, but things that we are seeing. You know, we all know the Maslow's hierarchy of needs, right? Has been completely disrupted. Today, I bet where you are sitting is very much influenced by whether you have access to some charging port for your phone. And people in Africa, and increasingly the demographic that we are seeing, actually think about power banks, maybe power, credit for their phones even before they think about breakfast. And that's a reality, right? So that disruption is happening not just in terms of Maslow's hierarchy of needs, but across different parts of our lives, right? So what I like to do is what is causing that disruption that I talked about, shifting demographics, certainly emerging technologies, and then, of course, the economies that we see and what's happening in Africa in terms of the economics, and then the promise of Africa. Of course, Africa is powering ahead, but there are challenges as well, right? So I think the world is becoming increasingly African. That's true. So by 2050, one third of all young people aged between 15 and 24 will be Africans. Okay. Now, by 2050, 1 in 4 people, that's like a quarter of people living on the planet who come from Africa. And by the 2040s, Africa will account for 2 out of every 5 children on this planet. So when I say that the world is becoming African, that's true. That should portend opportunities for all of us, right? So I'm using this, maybe this is the population pyramid of Ghana, and look at what's happening. If you look at the bulk of the population, that sits between 15 and 39, and this must matter to all of us, especially those who are here today for the opportunities that they present, but also the opportunities that they present for the future, right? So that's important, but that's also similar. The population pyramid of Ghana is similar to what you see in other African countries. Now, it's interesting. If you look deeper into that population, there are 2, if you like, what I call the tale of 2 worlds. There's the Gen Z, Gen Y group of people in that population that are very highly educated, tech savvy, high mobile penetration, high to, if you like, middle income, largely banked. Then on the opposite side, you have less educated, less tech savvy, of course, high mobile penetration, low income, largely unbanked. So if you're designing a strategy for this segment you have to really pay attention, right? Now, if you move forward, what then are we seeing in terms of tech innovation or some of the technologies that are driving this? Who recognizes this picture? Who are those guys? The Maasai warriors in Kenya. What are they supposed to be doing? Fighting. What are they doing? They're taking selfie. That shows the integration of the mobile phone and the penetration of that mobile phone across Africa and across different markets, right? That also means that the customer is becoming increasingly disruptive in terms of expectations, and that expectation is actually a moving target, right? So that also means that we are beginning to see fintechs and different business models emerging. And if you think about this guy, he may be a traditional bank, and then you find some more nimble, more agile fintechs coming into the ecosystem, and they are disrupting not just the business models, but of course the revenue models and then the operating models of banks, right? So what is driving that fintech space across Africa? There's high mobile penetration, 85% across most markets, and there's that mobile-first approach to doing business, especially looking at the demographics that I showed you earlier. We also see significant innovation in the fintech space, and we see a lot of venture capital funds coming into Africa. Then, of course, I talked about mobile money penetration, and there are some markets, particularly countries, that are really leading the pack in terms of the fintech innovation. You can talk about Kenya, Nigeria, Ghana, Egypt, South Africa. And that also means the regulatory environment is quite accommodating to support that kind of market development, right? So here's an example of mobile money success in Ghana. Perhaps the best example of fintech innovation and success in terms of the mobile money space. So think about it. That's the growth in terms of value from 2023 to 2024. I'm not sure about how many businesses do that kind of growth, but that's important. You also see that in terms of volume, okay? So significant volume growth as well. And that's happening right here, right in Ghana at the moment. If you then look at what's happening in Kenya, we all know the M-Pesa story. We see significant growth in terms of value, but also in terms of volume, right? So the mobile conversation or the mobile money penetration in Africa is huge. And like I said, the mobile phone is now that bank in the pocket of most people. So we're also seeing some significant developments in the crypto space. And these crypto transactions between 2022, July to 2023. And we see Nigeria leading the pack. You see South Africa, of course, you see Ghana, Tanzania. So there's something happening right there. And that must have serious implications for monetary policy and all the things that you can think about, right? So what does that mean? And also, what are we seeing on the economic side? This is the IMF World Economic Outlook for 2025. And you see across different markets, or maybe from the advanced market perspective, the Eurozone, the world economy is estimated to grow 2025. That will be about 3%, and then 3.1% in 2026. See what's happening in Sub-Saharan Africa, 4% to about 4.3% by 2026. That means there's also growth, significant growth happening in Africa. So again, taking the top or the fastest growing economies in the world, out of the top 10, you find that 5 of them are in Africa. You have South Sudan, Libya, you have Ethiopia, Guinea, Rwanda, and that's like 50%. That's significant. So both from the mobile money penetration, the demographic shift, we're also seeing economic growth. So where's the place to be right now? Must be. So what's the promise of Africa, really? For me, that's where the conversation sits. The promise in Africa lies in trusted partnerships. And if you like, AI-powered or technology-led solutions. And And that trust, if you were thinking about Africa, that must come from maybe what I call the 3 C's. Character, if you're looking at developing partnerships in Africa, character will be very important. And that's ethics, doing the right thing in that market, right? Competence will be important, and that's education, and that's where I sit in terms of making sure that you build the necessary capacity and talent to do business in Africa. And then, of course, playing within the rules, the regulation will be very important. So character, competence, conduct, those will be very, very critical pillars that will drive trust. Now, remember that in banking, cash is a raw material. The true currency is what? Trust. So that's crucially important. And that partnership must be not one-sided. It must be coordinated. I hope you like this. Yeah. So we're also seeing significant move in the AI space. And increasingly, technology is becoming like humans, and humans are enhancing what technology is able to do. More from creativity perspective, in terms of the data that we are feeding AI with, but also in terms of productivity. AI is increasingly helping us to be more productive. So I'll give you an example. We were writing some learning resources for a new curriculum at Chartered Institute of Bankers Ghana, and we heard about some AI solutions, and we got a few people together. In 2 months, we got all the resources together. But of course, then we realized that we needed to get experts to review. So the skills of the future are moving from typing, writing, researching to actually having that critical mind and asking the right questions, right? So that's what's happening. I think in the AI space, if you look at it from innovation standpoint, I think there's quite some hype, right? So maybe this is where we sit at the moment with maybe what I call the peak of inflated expectations. I'm sure the reality will set in. Whatever you think about AI, we need to combine the technical brilliance of AI with the human side of things. And that's how we generate or drive productivity, profitability, and inclusive growth, right? That's my standpoint. So Africa is not without challenges, whether you're looking at it from cybersecurity perspective or some talent exodus, or even just climate change and maybe low credit, But the good news is he who solves Africa's problem will get Africa's money. In other words, if you solve the customer's problem, if you have solutions that can address the needs in the market, that's how you make money, right? So he who solves Africa's problem gets Africa. You can attribute that to me. So are there challenges? Yes, but I quote to you what J.F. Kennedy said in 1962. He said, we choose to go to the moon this decade and do other things also, not because they are easy to do, but precisely because they are difficult. Africa may look challenging, but there are opportunities. And I think that sets the context rightly for us to have a panel discussion. And I'd like to invite to the panel. If you don't clap for me, I'm going to stop. I'm joking. Can we have Pearl Nkrumah? Pearl Nkrumah is the Managing Director, CEO of Access Bank PLC in Ghana. And then we have Daniel Sackey. Daniel Sackey is the former CEO of Ecobank Ghana Limited, but also currently the board chairman of CalBank. Great. And then we have Mr. Owureku, my very good friend, Owureku Asare. He's in charge of the Fintech and Innovation Office of the Bank of Ghana. And I have a very big surprise for you. For those who have seen the flyer, maybe you didn't see this coming. I have Tama here from Nigeria. Tama, please join us. So let's have the conversation around Africa and the experiences that we have just been talking about. Let me start with Dan. You've done significant work across Africa. In the last maybe 5-10 years, we've seen significant changes in the financial space. Maybe tell us what is driving the changes that we are seeing, both in terms of the mega trends, but also technology.
No, thank you, Robert, and thank you for having me. I think if you start looking at Africa from just the presentation you did, 1.5 billion population, basically split still on a regional basis. If you look at the Southern Africa bloc led by South Africa, if you look at the Eastern Africa bloc led by Kenya and the others, then if you look at the Western Africa bloc, Nigeria, Ghana, Senegal, and Cote d'Ivoire being the leaders, and then the North African bloc. So in that sense, you have a 1.5 billion population. The number of wallets you see is 1 billion wallets, mobile wallets. If you compare and contrast that with the number of bank accounts, you see probably are looking at 10, 15% on the best case basis. And what is driving that really will be probably availability, regulation, and a few other things. But over the past few years, what has changed is that you have seen the bank accounts grow from where they are to 1 billion wallets. And as at the end of 2024, the total value of transactions was $1 trillion. So if you are processing value of transaction 1 trillion, and then you have 1 billion wallets, of course, the number of accounts you see, the number of transactions you are going to see per wallet is now going to be very high. So the key trend there really has been across Africa has been the improvement in communication. We've seen 3G, 4G, and now 5G. And with that has come the speed of processing transactions and enhanced computing power. Of course, when you layer AI on top of that, then you have a situation where the traditional banks that were working the traditional way are now no longer able to match the speed of delivery, the velocity of transaction, dealing transaction volumes to ensure that customer satisfaction. Of course, customer gratification has changed from being probably a 2-3 day fulfillment issue to an instant issue. So these issues together have shaped what is happening. So what is happening now, you see probably channel for distribution now being like the mobile. And that is where the fintechs have helped play a great role in terms of working with the telcos as the owners of the last mile, because it has now ceased to be just the branch as the delivery model, but then the phone, as you rightly pointed out in your presentation. If that is the model for distribution, then that accounts for the 1 billion wallets that you have. That means that you need that amount of power behind it. You need that amount of transactions to be able to handle it. Banks are no longer able to compete, and then fintechs have come in. So the changing trend, apart from the mobile and the channel being paramount now, the changing trend has been you've seen more collaboration and partnerships, because banks have come to a realization that if you want to work in this environment, you don't own the last mile, you don't own the channels, then really you need partnerships. Contacts have moved from branches to agent networks, and probably every other phone that is in a rural area, in a village or a house, becomes a mode of communication, providing that banking services. Increasingly, another trend we've seen also has been the withdrawal of the big banks. You've seen Barclays withdraw fully. You've seen Stancha start slimming down their branches. I think you probably are now looking at only a few key countries they consider. And even then, notice has been served that I think apart from South Africa and one other, most of them they will be withdrawing from. So deglobalization, if I may put it, that will be continuing in that space. In turn, you are going to see more regional blocks coming up. We've seen the likes of, if you take South Africa, you've seen Standard Bank moving out. You see Standard ABSA moving out after taking over the former Barclays. If you bring it to West Africa, you see Ecobank. You are going to see the Nigerian banks, UBA, Zenith, GT Bank, all access expanding into Africa. Then if you get into the north, you're going to see Atijari Wafa, the BMC, Bank of Africa group, and that. So we're going to see regional blocks becoming the new face of the globalization we've seen in the past, because these blocks know their region, they know their countries, they know their businesses much better, and seem to have adapted to managing the African risk. And of course, then local regulations would also then have to deal with them. And I think it's a more friendlier face dealing with the regional blocks than dealing with the former global banks. So maybe let me stop here.
Thank you, Dan. So there's a huge shift, if you like, not just in terms of the demographics and the mobile phones, but also what banks are doing in terms of regionalization. That's what I'm hearing or picking from that. I'll go to Pearl. And Pearl, by the way, I think it's fair to say congratulations. But fell, it just became the CEO of Access Bank PLC in Ghana. But until then, you were the head of digital and channels, right? Doing a lot of things across Africa. So it would be good to maybe just hear your point of view on the most transformative, if you like, digital developments that are happening in Africa.
Thank you very much, Robert, and good afternoon to you all. And I know we have a couple of people online, so it's nice to have them here. For me, I think it's quite critical that we're having this conversation, especially here. This morning, I listened to the various panel conversations, and one thing that kept coming to my mind was that the problems are the same. We are talking about innovation and market structure, and it was interesting to hear even regulatory and policy divergence, even in a place like United States. And I think having been to, so my bank, Access Bank, we are in over 20 countries, but 15 in Africa. So my former role was driving retail business and digital transformation across 14 of these countries. And the regional blocks, as Dan mentioned, existed. For me, I saw a lot of opportunities. And when I want to talk about some of the emerging trends that is happening across these 14 countries as I experience them, like I said, the problems are the same, the opportunities are also the same. So the use of data to enhance the opportunities that exist, AI, data analytics. So currently, when you look at Africa, I think before the telco interoperability in Africa, or what I call the walleting of Africa, is not digitizing, it was actually a wallet. Payment, we would say banking population or bankable population in Africa was like 10 or 20%. Now I'll call it about 98%. Because at least, because of a phone, as you highlighted, you can send or receive money. But when it comes to access to lending, which is needed in this continent, in the continent to be able to enhance economic activity being driven by the SMEs, you have less than 10. And it's because most of these, in African countries, we do not have the accountability systems and other infrastructure. So banks couldn't take advantage of that. Fintechs are struggling with that. So for me currently is the use of the data that have been created from the payment orchestration to be able to solve the lending problem. So it's the use of data analytics and the use of AI to help credit scoring and other measures that will help us to be able to do that. The second thing that I would say is that, and Dan mentioned what is happening in the banking sector. Yes, it's collaboration. You cannot decide not to collaborate. There's no way banks will survive without it. So it's there. And I believe regulators, especially Ghana, regulators, Nigeria, they are doing very well to ensure that we harmonize these collaboration. However, cross-border payment is very key. Over 3.4 trillion of trade transaction is moving across Africa. We have PAPs, we have AFTA. But one of the things that is not driving, because of that, is making these policies siloed, is logistics and payment ability. If you go to Nigeria from Ghana and you want to buy something, you need dollars. You don't need Naira, or if you go to Kenya. So the use of blockchain to facilitate these payments with other digital assets like your stable coins and all those, it's also something that is highly needed and is happening across, and you showed it through the data. And there are a lot of things. So one last thing I would say is, and you touched on it, and today we listen to it as also the cybersecurity. With this evolution and disruption and the fast pace because of the opportunities that exist, is how do we digitize and bring technology to already legacy system that we are used to as banks. So how do we bring AI intervention into your AML, your internal controls and other things, so that as a bank, as banks who have the trust, as you mentioned, we are able to bring some sanity and that trust into this evolution. So I mentioned these three things: sure. Data analytics, intervention of digitization in controls, and cross-border payment using blockchain.
Excellent. I'll come back to you and explore the collaboration bit a bit further. But I like the sound of data. I'm told that data is the new oil, but you've got to mine that data to get the insights that will drive value for you, right? So, Tama, before I come to you, let me go to my very good friend, Owureku. I showed the developments in terms of the markets or central banks that are actually supporting the development of fintechs and all the things that we've just talked about. It'll be good to hear from your standpoint how Bank of Ghana, the central bank, is actually enabling that ecosystem from the infrastructure base, but also all the other things you're doing to ensure stability, right?
Thank you very much, and good morning, and wherever you are, good morning, good afternoon. I think just to take it from where Dan and Pearl left it, the development that we are seeing today is because of how open the central banks are becoming. The days of command and control, I mean, you have to book weeks before you've been engaged the central banks. They are over. Now, we've gotten to a point where you enable and you supervise. It's even gotten to that level where I think at times the central banks are even moving faster. So if you pick from, I quite remember in 2006 somewhere when the real M-Pesa evolution was really coming up. It happened because the central bank said, let's give these guys the opportunity. And if you look at the numbers that Dan talked about and some of the highlights that Pearl also shared, it so happened because the central banks were open. And how did it start? There was a need to enable fast payments, right? So you need to be able to provide that level of infrastructure. So I know, using Ghana as an example, the banks were actually approached to say, let's come together. At the time, Dan, that's why Dan is smiling. Let's come together and set up an entity that will facilitate instant payments. The banks were not ready. So at the time, the central bank took upon itself to say, we will actually set up an instant payment system that will facilitate, even if it's not instant, but it's real time. At the time where we're clearing checks 2 weeks, but then there was a need for us to then reduce the TAT for some of these interbank transactions. Then it moved on to instant. Okay, and then
so just to clarify, you're talking about the interbank payment and settlement system.
Yes.
Okay.
And this is not just for Ghana. It happened in East Africa. SADC also tried. I know even Nkrumah, they are working on a project now to be able to get to where some of these corridors are now. So that should tell you that the central bank has a clear leadership in trying to make sure that there's an infrastructure to facilitate these transactions. You know, I'm sure our kids always approach you and talk about roadblocks. The youth, the demographics that you showed, I don't think they will be able to withstand checks clearing in even 2 days. So there's a need for us to be able to heavily invest, have a digital public infrastructure to be able to enable some of these transactions. When it comes to innovation, I mean, we've a number of central banks that's come up with regulations, acts to support the new phase of financial entities. So that's the fintechs and the likes. But we can only go this far, or we can actually go to the point where our eyes can get to. We've had situations where entities approach us, okay, to say that we want to do A, B, and C. We don't have regulations for it. Doesn't mean that we'll not allow them. We create that level of opportunity for them to innovate. So that is where we've come to. We enable, and then we supervise. So those are the level of initiative that we are bringing on board to make sure that the kids that are into roadblocks don't get blocked when they want to dream. Thank you.
Thank you for that. So you enabled and you supervise. Okay, excellent. Do you know why we have a brake in the car? So that, what was the purpose of a brake, car brake? Right. Is it to stop you from driving or to make you accelerate? It's actually to, which of the, if you have a car that has a faulty brake versus one that has a very good brake, which one would you drive faster? So the real essence of the brake in the car is to help us drive faster. The real essence of regulation is to enable us, not to stop us, right? Excellent. Let's go to Tama. Tama, you are into the private equity space as well, right? And Tama, you have businesses across, and you have predominantly Nigerian-based business as well, right? I know when you think about Africa, you can actually put a few countries into Nigeria. So I want to find out from you, what are you seeing in Nigeria, right, in terms of the discussions that we're having today, from a demographic standpoint, from innovation standpoint, and all the regulatory stuff that we've just talked about?
Sure, thank you very much. So obviously I don't fully look Nigerian, so some of you may be wondering on what basis or authority am I sitting up here being the one to speak about Nigeria, but I am Nigerian Egyptian. I guess the DNA on the Nigerian side wasn't the dominant one. But so on my side, as was mentioned, I'm more on the smaller fintech side that's trying to come in and disrupt. And some of the things actually that the panelists have already highlighted, including yourself, Robert, are quite exciting, because some of the things we're looking to roll out in Nigeria as our launchpad. So it's a Pan-African platform, and it's actually quite exciting that some of the issues that have been listed so far are in the pipeline coming through. Nigeria is, I think it was Jay-Z that said, if you make it in New York, you can make it anywhere. I think when it comes to Africa and you say, he who can solve Africa's problems takes Africa's money. And I think if you can solve Nigeria's problems, a lot of the problems within Africa in and of itself kind of roll in as well. So innovation in Nigeria has been quite fascinating and quite accelerated. And I think what the pandemic really did for the continent overall, while people were, contemplating life as they were locked in, was how can we innovate? And that's when I think we really saw a huge explosion on the scene from the fintechs. The brick and mortar banks realized that, okay, we need to pivot because given the pandemic, no one's really coming in. No one can send their checks to be cleared, and we don't even have employees per se to actually facilitate that. So I think that made us rethink the entire platform around the continent. Nigeria itself is quite fascinating. I mean, we've had some of the biggest unicorns across the continent, everything from Flutterwave paving the way as a payment gateway. You had Paystack, which was acquired by Stripe. You had recently MoneyPoint. And so the innovations in and of themselves are really leading the way. That being said, it is a diversified continent. As much as I want to break the news to a lot of our fellow Americans, it's not one country. It is a continent. I remember when I was being educated here, I was always told, you're a Tamer from Nigeria, you must know John from South Africa. And I said, I know Johns, but none from South Africa. But the point is, there is diversity within the continent, but there is a level of uniqueness and a similarity in the financial DNA. Some more evolved than others. I think with Ghana, I definitely commend the Ghanaian infrastructure and the banking, especially with the central bank, on how they're looking to lead on that. But when you look at Nigeria, I mean, there's a huge oversaturation of the fintech space. But where I'll throw a bit more challenges, and being the fintech and non-government person, I'll throw the challenges. I think the issue we typically face is we think in silos. So even when we innovate, we're still thinking in verticals. When we talk about fintech in the continent, it really falls currently into one of three major things. It's either payment, and we create payment gateways. And I don't know how many different ways we need to be able to create the ability to collect your money. Now, the second thing we have is obviously lending, which is now everyone wants to do small credit lending. And the issues we face, obviously, is data collection and how do you then create it? And going back to the roadblocks scenario, I think how we look to create credit profiling has to also shift. The amount of time people spend on their social medias, the amount of time people spend, just across the internet, all of that we need to rethink how credit profiling really works in order to be able to tap into those that are unbanked and to bring them into, the ecosystems, which I think fintech is a huge facilitator for that, even, in working collaboratively with the banks. And then, I think the third piece, obviously comes around remittance. And that's where the cross borders are. And the philosophy has always been each innovates, but they innovate separately. I think where we're seeing a bit of shift, and that's really been evident in Nigeria, I still think there's a lot to do, is the fact that we've always looked to the West and see what technology looks like, and then we replicate it. The shoe doesn't always fit, most of the time it doesn't. Whereas I find it fascinating that if we actually look a little bit to the East, some of the interesting technologies there where you see vertical integrations becoming more borderless. And I think that's what will become more powerful for Africa. And that's what we'll see more and more in Nigeria when it comes to those type of innovations.
Great. Thank you very much, Tama. I think you've said a number of very important things, right? And I'm not going to attempt to summarize that. But I hear you say COVID-19 left us almost a good legacy. That out of those crises, there were also opportunities, right? So thank you for sharing that. Pearl, let me come back to you. So from what Tama has just said, collaboration is the name of the game, right? Of course, we are competing, but we should also then be collaborating. So are there successful partnerships, collaborations that you have seen across the African continent, and are there lessons, for those who are thinking partnership in terms of the African opportunities that we are discussing today?
Yes, I would say we still have a lot of opportunities and we still have a lot to do. I love what my regulator, I need to be mindful because it's
the free space.
No. So I don't believe that. I think now we are kind of leapfrogging, but we have been a bit. It took us some time, and it made the partnerships quite cumbersome. But I've seen successful partnerships. If I use stories in Ghana, Nigeria, Kenya. So, for instance, M-Pesa became M-Pesa because of banking partnerships with M-Pesa. I always say that I don't know how many people will put $20,000 equivalent just on a wallet when they cannot identify the building where if they need their money, they need to go and take it. So far as they know, the money is on the phone, but if somebody has the stock of it. So what those partnerships, and is the basic example I'll give, is that legacy banks, traditional banks relationship with the telcos when the evolution started, which gave the fintechs or the nameless kind of companies trust that if you do this with us, at least you can find a Barclays, you can find an Access Bank. They are fully regulated because at that point, the regulator was not really regulating that side as it is. So that's the basic form of partnership I can give you. And it has moved. So currently, when you look at these three countries, there are a lot of innovations that are coming together. Products are being co-created. They are innovating together in a manner where banks are setting partnership platform. My bank, for instance, has a whole team across the group. There's a fintech foundry in the bank being paid for the bank where fintechs used to go and test their product as they want and then take it into the banking sector. I once said in a conversation we had that we don't have, as traditional banks, fintechs, big techs, we cannot live in isolation because the customers are bringing us together. The need of the customer is now what is dictating the kind of innovation that we want to see. And that is what is bringing the collaboration. What I believe we have to do quicker is the regulator making sure that it's moving us together in a manner that will not leave room for any other things. So, for instance, I look at what is happening in Ghana with the digital asset bill. I think that was a bullish step taken by any regulator to say, looking at the movement of crypto in my country, I might as well regulate it, instead of saying you cannot do crypto in my country. And to do that, they have given the banks the opportunity to say, you are the trusted partner. You are the one that people believe in. You will lead it with the fintechs and the owners of the crypto and all those things. So there are a lot of collaboration. I believe we still have a lot to do when Tama mentioned payments, too much payments in the system. So for me, the space where I want us to really get to is where we use our capital as banks. We use the technology from either the big techs in terms of infrastructure build and other things. And you use the fintechs in a manner where we are able to lend fluidly and cheaper because we have all the information, we have all the data, embedded data, to be able to lend to anyone in Africa, banked and unbanked, and where we are able to facilitate lending in communities. So for me, that is when I would say all the parties within the ecosystem have come together collaboratively in a manner that serves value to the customers that we serve.
Great. Thank you, Pearl, for crystallizing that for us. And I'm just going to go back to you, Owureku. You must have a very tough job in terms of balancing innovation with regulation and ensuring stability of the financial system, right? But you've also, as a central bank, done a number of things. I think you are the first to issue the ECD, or pilot it, CBDC, and then of course you have this regulatory sandbox. But there must be tensions between letting people go and innovate, but also making sure that the customer is protected, all the money laundering and KYC requirements, compliance, and the customer data is secured. It would be good to hear how you are balancing that.
It's an interesting one for me in particular, and I think my colleagues will also attest to it. And I must say, full openness, I just joined a bank in May. I'm from the private sector. So given my previous experience on the continents, 33 markets, there's a level of consistency across. The central banks are now being intentional to make sure that, yes, we are opening up, but we have the guardrails to protect the customer and the market as a whole, because our responsibility is to make sure that we have financial stability. So as much as we want to open, and I'm happy that Pearl highlighted what we are doing in the virtual asset space. The desktop research that we have shows that in 2024, $6 billion value went through virtual assets in Ghana. So I think your presentation highlighted 20 in Nigeria. Okay, so that small amount there for Ghana was $6 billion. So $6 billion? No, Nigeria is 20, so Ghana can't be 60. So that should tell you that do you pretend that these are not happening, or you take the bullish approach to say, we want to contain this. Even though it's a DeFi environment you are getting into, you need to try as much as possible to let it be quasi-CeFi, so that as much as they are moving ahead, you're providing the guardrails, the safeguard for the markets and for the economy as well. So, and overall, look, if we don't get this to the point that we want to get to, some tsunami will come over, because now everything is gotten into the Web3 environments, blockchain, just name them. metaverse, just name it. So you need to try as much as possible to be intentional to try and lead the way. Otherwise, the guys will continue to dream and they don't have anywhere to showcase what they want to do. Because at the end of the day, everybody is an entrepreneur. They want to be able to attract customers. But how will they do that? They can only do that when the regulator gives them the opportunity to try what they have. So what we've done in the past is to create that level of sandbox. So within the Bank of Ghana, we have the Fintech and Innovation Office. The innovation unit is responsible for creating that level of environment. Any dream that you have, walking, come and play in the sand. That's why we have the sandbox. Just come and play in the sand. Everything that you want to go to market, let's get it right there. Obviously, we have some guardrails, right? We will limit you to the number of customers. You won't be able to go to market it publicly like you should be able to. So when we go through the process with you and the journey with you, and we are comfortable, we will then be able to put in place directives to guide that particular activity. That's the same approach that we are using for the virtual assets. Our approach is more on activity-based than institutions or risk. So it's activity-based. We're actually looking at 14 activities for the virtual assets. So for you to be able to get a license, we're not going to say you've been approved as a virtual service provider. You've been approved for this particular activity because we have control over these activities. And I always say that the approach that we are using is just going to create that level of investment opportunity for those of us here. The moment we pass our virtual assets service providers bill, we can tokenize any assets that we so wish. Meaning, let's even use gold as an example. Bank of Ghana, we have gold in 3 denominations: the 1 ounce, quarter, and then half. Gold is around $1,003 an ounce, right? Dollars an ounce. Can you imagine the woman in the village who want to also buy gold, but just get a gold coin? Yeah. She needs to cough up that amount of money. But tokens would then give us the opportunity to fractionalize that gold into maybe 1p. So that is the level of innovation and openness that we are bringing to the market to make sure that it just doesn't stay with the likes of Tama and Dan and Pearl, but we get to the lower tier, facilitating financial inclusion. Pearl talked about access to credit. These are innovative ways that we want to also bring to the market, to lead the market to get to that point. Recently, we issued our digital credits directive. Before then, if the MSMEs, which is the huge base on the continent, want to access credits, yes, they will approach Pearl. Pearl will be nice in extending credits, but that is only Pearl, because she has that level of understanding. Her entity have that level of understanding. Will Dan be able to do that? Dan's bank, maybe not, because shareholders fund is always discussed at the board meetings. How do you protect that? So we've actually created that opportunity for you and I. If you have your equity, you can be able to get into that space to lend to the MSMEs and individuals that are loitering around working. Because in Africa, it's actually propelled by micro entities, right? Everybody is a business person in Africa. So we need to be able to facilitate that for them by providing them that level of access to credit.
Great. So this is a very forward-looking regulator, right? So thank you very much for sharing that. I think it will be fair to come to you. Maybe we have 1 or 2 questions, right? Before we wrap up this conversation. Dan, I'll be coming back to you in terms of the cross-border opportunities that you see, and Tama, maybe how the future looks like, right? We'll take 2 questions. I see a hand up there. I'm going to be a bit biased. Nancy. Oh, there's another one there. Okay, so let's start with the lady.
Thank you very much. As I said, my name is Nancy Madi, and I'm a student from Georgetown Law Center. And let me also disclose, I'm from the Central Bank of Ghana, so I'm a bit biased. So my question is that the Sub-Saharan African region, between June 2024 and June 2025, in terms of virtual assets, was valued at 205 billion, showing an increase of 52% compared to July 2023 to June 2024, with Nigeria taking the lead and Ghana being in the top 5 of countries that have participated in cryptocurrency transactions. And this is according to Chainalysis. This makes our region the third most dynamic in the world of crypto transactions, just behind Asia Pacific and Latin America. Also in line with the central bank taking that bold step to develop regulations for virtual asset service provision, how are traditional banks positioning themselves to fully participate in this ecosystem, especially in terms of treatment of crypto assets, custodian services, or trading in crypto assets themselves, and the potential for financial stability? And so I just want to find out from the banks represented here, what are the true practical steps that you're taking to make sure that crypto transactions are fairly treated? And then you also position yourself to participate within this ecosystem, especially also considering the demographics of the customers that you have now, who are young, who are savvy, and between that youthful population that are really participating in crypto transactions. Thank you.
That's a great question. Nancy, are you sure you don't have another career in journalism or something like that? All right, let's take we'll put them together and then you can respond, right? Let's take the other question, sir.
Well, thank you very much. My name is Jude Ogene. I'm the general counsel of a company called OpenNode, which is a Bitcoin payments infrastructure company. I also happen to be from Nigeria. Shout out to my Nigerian brother over there.
Sure.
And a long time ago, I graduated from Georgetown Law, so Hoya Saxa. All right, so here's my question, and it's really more of a plea. Many of the themes that you expounded on are things that are very near and dear to my heart. The gentleman from the central bank talked about functional regulation, which is, I think, exactly what you should be doing. The gentle lady from Access Bank talked about the co-opetition with fintechs. Somebody who is in the fintech space, that's exactly the right frame of mind to have. We don't want to eat you. We want to eat outmoded ways of doing business. But here's what I would say, and I think this goes to a comment that Tama made, where he talked about not looking to the West for tech solutions. As someone who is a general counsel and chief compliance officer, I think the same is no less true when it comes to regulation itself. That a lot of the ways that African countries are thinking about regulating the digital asset space are basically, I'm going to take everything that the West has done and I'm just going to export it, to Africa. And it really does not work. So if it's really more of a plea than a question. And that is to say, as you are thinking about ways of doing business, just as telcos came up with unique ways of doing business on the continent, so too must you, and the regulation must follow suit. Come up with, please, bespoke ways of doing AML, KYC, all kinds of functional regulation. Don't just adopt the issues with the legislation from the West, because as you can tell, even with the regulation here in the West, you still have issues. The SEC and the CFTC are fighting over who has jurisdiction over virtual assets.
All right.
Let's avoid that outcome, please. Thank you.
Thank you. Thank you for your suggestions and comment. We'll take, sir, let's pass the mic this way.
Hi, my name is Derek Price. I am Afro Dollar Money. We are the African Americans only approved US dollar alternative currency by the Treasury Department. So our purpose was to develop this money because Black America, we spent $2 trillion. So we're the 7th largest nation in the world if we were to generate. The point was to loan money or put money in Africa so we can go ahead and create an indigenous credit base. Because no matter what you do, and even though you think China is going to do it, the dollars are still going to be the #1 trading currency, transaction currency. So I'm glad the Ghanaian central bank is here because we meet with the Ghanaian president. You know, his mother and father's from Chicago. That's where I'm from. So what I want to propose, even though he did say that, I have to defer different from what you want to do. Even though these are independent fintechs, they still have to deal with the international banking laws and regulations from the West. So whatever they comply or do, whatever loans they're doing, they still have to have some sort of backdrop of how they can convert that money back to dollars or over to do transactions trade. So that's what you're going to have to take into. The problem is they don't need to buy into this digital asset so broadly. Africa needs to develop their own strategic piece. They need to get their credit base for the indigenous peoples and also for the farmers and everybody else. That needs to be the base of, instead of being exporting for colonial powers, they need to develop their own internal circulation. So my question for you, for the banks, is to this. We are trying to bring over, we're putting in regulation, at least about 250 million for each of the countries. But right now, I'm establishing our own fintech to integrate with each currency for basically West Africa, which is where we're starting with right now. So we want to try and get the central banks on board so we can do cross-border trading from bank, consumer to bank, and consumer to consumer, more peer-to-peer, and get rid of the institutions. So what do you think about that?
Great question. So sadly, we are out of time. Time is our enemy here. So I'm going to allow you to respond, but you have 1 minute each. But let me start with Dan. You must have a point of view. And if you combine your response to the questions that have been asked with the cross-border opportunities that you see on the back of Africa Continental Free Trade Area, on the back of Pan-African payment and settlement system, it would be good to, and then, you know, what he just said in terms of cross-border.
Okay, so you want me to take a stab at it and then give my closing remarks? Is that it?
Yes, absolutely.
Okay. Good. I think the two questions regarding readiness of banks and also the position of the central bank are key. But it's important to realize that banks tend to do well when there's regulatory clarity. In the absence of regulatory clarity, it will be difficult for a bank to move. One, because of the sword of Damocles that is always hanging over a bank's head, which is regulation. And the slightest deviation from compliance, you then have a penalty and potential loss of license. I think that when you are entrusted with shareholders' funds, that would always be the handbrake that holds a bank back. And that has been one of the criticisms about the slow response of banks. One, to the fintech, first to the mobile channel development, to fintech, and then now to crypto. In all of those three cases, the issues have been regulatory restraint and the need to ensure compliance at all times. Increasingly, banks would probably develop a way of dealing with, which was try and set up a fintech subsidiary. But the other issue is that once that fintech is linked to the bank, it comes under the same regulatory ambit of the central bank. So you can either have a loose relationship with a fintech that then has a bit more ease and freedom in innovating, dealing with some of these issues without putting the license of the bank in peril. So in the past, you've always seen that it happened with the mobile money thing. And you realize that in the leaders on the African continent has been Kenya, Ghana, Nigeria. But these are the countries where the regulators allowed, led, and provided clarity for the banks to operate within it. If you look at the 1 billion wallets that I talked about, these Kenya, Ghana, Nigeria account for more than 60-70% of the wallets on the African continent. And that, once again, is because there's regulatory clarity. I think that the regulation of the virtual assets is going to follow that same pattern, where, given what has been done with the draft regulation that we see coming up, I think other countries are going to jump on board. And hopefully we will see clarity being brought, because nobody wants to lose the banking license. Don't forget that one of the key requirements for continuing to maintain your correspondent banking license is also compliance with the regulations. And that's where your question comes in, that banks would definitely start from that angle because you will not want to be seen to be flouting a regulation, even if ill or probably half developed, because it's flagged as a non-compliance issue and you want to get out of all that. So that's the first part. The second part, just to address the cross-border issues, I think we've seen the main issue really will be trade, because that's what leads to cross-border payments. And underlying the payment issue has been the challenge in converting from one local currency to the next and being able to do that seamlessly. And in most cases, the dollar and the euro have been the medium through which local currencies have gone to be able to. So you probably are selling from Ghana to Nigeria, you'd have to go through the dollar. But selling from Ghana to maybe Senegal, you have to go through the euro to get into the safer. So for that to work, for cross-border payments to work, we then need to see a breakdown of that. And that's where AFCFTA and then the PAFs come in, because they now enable payment in from one local currency directly to the other. But to extend that to trade, then 2 or 3 things need to happen. The first thing that needs to happen is that it needs to be sort of uniform and simpler documentation, because most people, I mean, if you look at the African continents, countries, villages next to each other, different countries have been trading with each other for centuries and will continue to trade. But if you want to look at it on a larger volume basis, then you need to simplify documentation. You need to simplify the process of moving.
Dan, sorry, I need to interject.
Okay.
I think there's another event that is happening here very shortly. So
let me just wrap up.
Closing comment.
Yeah, that's all. So you need to simplify documentation, trade, and also you need to create a corridor where logistics can move very freely. And then each country or each region needs to look at the products where it has maybe the stronger competitive advantage, look at agro, pharma, and probably some industry. That's it.
Excellent. Tama, in 1 minute, or maybe less, 30 seconds, please.
Sure.
What's the future that you see?
I mean, I think I'm a lot more bullish on Africa. I don't see Africa as kind of the next frontier or an emerging continent. I think the time is now. I think the innovations that we will see coming out of the continent are quite pertinent. Regulations, if the expectation is that you will always regulate in order to let the fintechs and innovation engage within the full regulations, becomes quite challenging, because I think then the idea is you're always expecting technology to be evolutionary, and evolutionary is too slow. If I think it was Henry Ford who said, if I wanted to, innovate for the existing market that he had, he would just get faster horses and not a car. So I think one of the things we have to be thinking about is creating the framework that can allow for trust, but letting the fintechs help lead. And the banks really have to appreciate that it's about collaboration. And there is a huge necessity for collaboration to then take it forward.
Thank you very much, Tama. I'm afraid we've run out of time. I was going to choose between Pearl and the regulator. I'm not too sure. At this stage, sorry, you wanted, okay, 1 split second. Go ahead.
Okay, so on the our readiness as a bank, I think we just tapped. We will, like Dan said, clarity is now going to be provided from the bill, and the transactions are already happening. Now the visibility is going to be created, and the bank becomes the guardrail plus the collaborator to make it happen. So how the transactions are being processed cross-border, we'll put ourselves into that. So that for me is it. I like your question, but I will tell you that a lot has changed in terms of how regulators within the African context are now regulating. We pick lessons and then customize it locally, because we are a global nation. So it is. And cross-border, we'll talk after this. Thank you.
And I trust that Pearl knows exactly what she's talking about, because she's also the chairperson of the Ghana Stock Exchange, right? So on that note, I think we can clap for this panel. It's been fantastic conversation. Again, Tama from Nigeria, Owureku, Bank of Ghana, Fintech and Innovation. Of course, Daniel. Dan is also the faculty member at the